Welcome back to Finance Shark. Oil prices have been steadily rising in the last few years, and this is a trend that doesn't seem to be going away anytime soon. For many real estate investors who own rental properties with utilities included, these higher oil prices mean an increase in operating costs for their business and a decrease in profits. To protect your portfolio from the impact of rising oil prices, it is important to make sure that you are regularly monitoring utility consumption and cost trends so that you can take appropriate action when necessary. Before we start, smash the like button and subscribe to the channel. Let's get after it. Price surges in utilities can often occur when the supply is low and demand is high. For example, most used appliances turn on at the same time, such as a hot summer day with afternoons filled with millions of residential AC units turning on or heating systems turned on cold winter nights. To avoid this situation from happening regularly, landlords will need to find ways to encourage tenants not to use these appliances during peak hours by offering incentives or implementing energy-saving measures throughout their properties. In the past, landlords could offset the cost of energy consumption by raising rents to cover expenses. When landlords can't do that anymore, they'll need to find new ways to make up for the difference. Here are a few ways. One way is by charging tenants a higher percentage of what it costs to use those utility services. This will offset the increased cost of utilities to keep their operating expenses flat. Another option is to implement energy efficiency measures throughout your rental properties. Some examples include installing solar panels, energy-efficient appliances and lighting, energy-efficient HVAC systems, boiler, hot water heaters, or furnaces. These investments can help you reduce operating expenses without having to adjust rents or subsidize utilities. The key thing here is that these changes will need to be carefully implemented so as not to alienate tenants and cause them to look for other places where they can live. For example, if you are raising the rent to offset the cost of higher utilities, this must be done gradually over time. Another way is to utilize month-to-month leases. The inability to adjust long-term leases creates a situation where tenant rents are locked in with variable costs for landlord utilities. Month-to-month leases allow for more flexibility for raising rents or turning over the rental at higher rents if need be. Understanding this issue when you buy a property is essential, and thinking about it on existing properties for the future. So just be aware of what your options are and weigh them carefully against each other so you can make an informed decision on how to best proceed based on oil price trends. Please comment below with other suggestions. The links to everything that we talked about will be down below in the description box as usual. Please smash the like button and subscribe to the channel. Thanks for watching.